Good afternoon, boys and girls. Welcome back to another Trading Oracle video. This today is going to be about the new RSI Live Divergence Indicator that we have. We added this. It's probably been about 3 weeks ago now, and had a few issues with the initial video that we had to come out with the video editor, so I had to redo a lot of this. So bear with me a little bit. And what I'm going to do actually is I'm going to kind of walk through the very beginning of it, just in case there's some people watching that maybe don't have the Trading Oracle indicators quite yet. This one is only available with the Platinum Plus plan, so keep that in mind. What you're going to do is once you purchase Trading Oracle Platinum Plus from our website, it takes usually 5 to 10 minutes, sometimes a little longer depending on how quick TradingView kind of moves. But it usually takes about 5 to 10 minutes for it to be activated. So you're going to go up here right after, about like I said, about 5 or 10 minutes. You're going to click indicators. You're going to go to invite only, and this is the one right here. So Platinum Plus RSI Live Divergence, and you're just going to click that one time. It'll add it to your chart. And I'm also going to add the Trading Oracle Platinum Plus here too. So I'm actually going to go through my settings again. There's a lot of people that's been asking for that, so I'm going to go through that again as well. So I'm going to click on that one time, and it's going to add it in that top left corner. You hit the X, and you got to wait for it to should be populated. So once you, as far as the Trading Oracle Platinum Plus, just our original kind of suite of indicators here, whenever you first get it, you're basically just going to hit this settings box right here. You're going to go up here, you're just going to click the I understand, the indicator cannot win every trade, blah, 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 and that's going to populate everything. So I do want to go through this first, just so I don't forget. So my sensitivity, I usually keep around 150. Now this will change sometimes, like if I'm watching the market and I see a divergence, possibly playing out, I will turn it down a little bit to 80, 90, something like that, because that just makes those buy and sell signals come out a little earlier. So I usually keep that around 150 though, just for normal trading and stuff like that. But the MA 1, 2, and 3, I only use one, and I just use the 200 moving average. That would be kind of up to you guys, whichever one you guys want to, or if y'all want to use all three, just pick 3 different ones, whether it's a 200, a 50, and stuff like that. So if you go up to style, you're just gonna, as far as what I do anyway, I just take off the 2 and 3 EMA, and I just keep that one here. And then we'll go down here. I usually keep the Bollinger Bands on, and I will have the support and resistance on as well, and that setting is always at 180. And all of these you can go through and put your spin on it. This is not like the way to do it. It's just what works for me. So I do want to kind of make that clear. This is not like the only way that you have to do things. I always recommend for everyone to kind of go through and create their own settings and just find out what works the best for them. And these settings might be exactly what you're looking for. So and that's pretty much it. So the reversal bands I usually keep on as well. I don't really mess with the settings for that. And order blocks I don't keep on all the time. So and for the style, as far as all the signals, I'll usually keep all those there as well. So like if you don't want to see slingshot signals, if you don't want to see golden signals or golden slingshot, whatever, you can take some of those off. But I recommend just kind of keeping everything there. All right, so now this looks like a lot on the chart, and it can be. I mean, this is one of those things where I still like to use these signals as an extra confirmation, and those that know me and the way that I trade, I'm a confirmation trader, so I like as many confirmations as humanly possible before I get into a trade. And just like I tell everyone is, if you're not 100% confident going into a trade, most of the time it's probably not going to work out in your favor, at least for me anyway. If I have a gut feeling in my stomach that I probably shouldn't be taking this trade, but I take it anyway, I pretty much know what's going to happen. So that's really important to have as many confirmations as possible. And there will be some times where it's only 1 or 2 confirmations or whatever. So just kind of make sure that, like, if you're a user of Trading Oracle, and we have thousands of people that use this, if you're a user of Trading Oracle, you have to understand that these tools are meant to provide extra confirmation for you in your trades. They're not here to basically tell you what to do on a daily basis, because like it really depends. Like on this day right here, yeah, if you would have took this signal, you would have made a ton of money. If you would have took that one, you'd have made money. If you'd have took that one, you would have made money. But there's certain days where the market's a little choppier, and there's 40, 50, 60 signals that come out, and you're never going to make money like that, especially if you trade options. So just keep that in mind. I kind of went on a little bit of a tangent right there, but I just want to make sure that people understand that. So this RSI Live Divergence. So one of the reasons that we wanted to add this was because we already have a TSI divergence tracking indicator, and I'm going to add that on in just a minute. I personally, especially over the past few months, have been kind of incorporating RSI into my trades a little bit more, just because I like to watch for a confirmation on RSI and a confirmation on TSI when it comes to looking for divergences. And divergences are not, really difficult to understand. So what they pretty much are, and I'm going to go through this one right here. So what you're seeing here is a higher high being made in price, and this is before, or this is a little bit like an hour after the market opened. So after market opened, you had this, it was really choppy actually. I mean, it looks like it just went straight up, but it was pretty choppy. These candles have got wicks on both sides, and it was just, a little bit choppy going up there. But we had like this initial increase, and we dropped back down to where VWAP was, kind of bounced off of that. We made a new high, but we weren't accepting price up there. There was clearly, not a lot of buyers there, and there was, they were just having a hard time, getting it past or much past that previous high. So what you're seeing here is a higher high being made, and now we don't have RSI up here. So what I'm going to do is I'm actually going to add it real fast, just a regular RSI. And what this is showing, so you've got a higher high being made, and then on the RSI, if you go through the same point, so if you just kind of, we're just going to confirm this one in general. We're just going to go straight down. It's going to be basically the peak of this RSI here. So if I start the line there, and then I go up and come all the way down here, you're going to be about right there. So you've got a higher high being made and a lower high being made here. That is a bearish divergence. And what that basically means is, it doesn't mean that price is definitely going to go down. It just means that it's a higher probability of price reversing from that point. So the reason that I like these trades so much, and you can also look at this as a double top. So for those that like extra confirmations like me, that's just kind of the math and the things that I say in my head. It's like, okay, well, we got a bearish divergence, but also it's basically a double top. So and price is clearly having trouble getting past that point. So this is a high probability trade. The reason that I like these so much is because it's so easy to identify where your risk needs to be. And basically, what I typically do, I don't usually put a stop loss at the high of that wick or whatever. I'll usually like come up maybe, in this case it's probably about 25 to 30 cent, and I'll usually just have like a little bit of a zone here of where my stop loss needs to be. So if price ends up kind of coming down a little bit, maybe I'm in the money some, but then it kind of increases back up and breaks those highs, or breaks this most recent high with volume, 9 times out of 10 it's not gonna the bearish divergence isn't going to be confirmed. It's not going to work out. So this is why I think that these are really important to watch out for, and this new indicator actually maps it out for you. So I do think it's important to also add like RSI down here, just so you can kind of confirm there as well. And also another thing too is to add the TSI. So in this case, I'm not 100% sure. Yeah, it did. So in this particular case, if you come down on the same points here and draw your line from there to there at the same exact points, you'll see that you've got a divergence on the RSI, TSI at the same time. So that's your multiple confirmations. And it's a low risk trade. You've got a very good point of reference of where you would get out at if price gets back to that point. And that's it. It's really just a low risk, high reward trade. Now in this particular case, like obviously nobody would have thought that this would have happened. My exit point was around here at the bottom of this. So initially just kind of what I was thinking for this move as far as kind of how the market was moving at this time. I had no idea that we were even going to be able to break out of this range. I thought it was just going to be a choppy mess, but that's the thing. Anything can happen in the market, and the way that you pretty much everybody's going to trade differently as far as that goes. You can take it up here and get out down here or whatever, or if you want to get out down here, maybe get out at the bounce of the 200 moving average and then hold a runner for the rest of the day or whatever the case is. You can always do that. So there is no right or wrong way to trade them. It's just important that you kind of know what these patterns are, and that's why we created this, because there are a lot of people that can't really identify these, or they have trouble identifying them. So this does it for you. And there are some that aren't going to work out. You've got one here that really didn't work out, and that was pretty much pre-market. So a lot of people's not going to really be trading there anyway. But we're going to go down here, and there's also some of these that may not work out, where they're showing hidden bullish divergences, and you've got some kind of peaks in here that people may think the price is going to reverse off of, but you have to make sure that if you do take one of these, if price is basically bouncing off of one of these levels and you see a bullish divergence here, you have to make sure that your stop is just below that previous low, so it's still going to be a low risk trade. The divergences that I typically kind of pay more attention to and I think hold more weight are the hidden divergences. So the divergences that actually go along with the trend, and there's going to be some times where they don't pick all of those up. If we go back a little bit, we might be able to find some. If we see, as a matter of fact, no, I think they'd yeah, because I just added it to the chart. So all right, what I'm going to do now is I'm going to go in and I'm going to go through the settings of this. So this is going to be your settings right when you go into it. And the RSI period is 14. I always keep it at 14. And I always do candle bodies. You can do candle wicks if you like. It's not really going to change a whole lot, I wouldn't think. Let's see what it does here, if it changes anything. Yeah, I mean, it just changes kind of where the divergences are, and then it may take away, yeah, so you took away one of those there. I put it on the bodies because I think that that's a little bit more important than the candle wicks. So, and then for the pivot look back left, that's just basically how far back left, how many candles to the left it's going to look back. And I usually keep that around 10. And for right pivot, so see now with the 10, it actually took away those there, but it kept these up here, which is good. So all right, we're going to go back in here. I usually keep the right at 2 or 3. I'm sorry, I keep that default. You can lower that to 2 if you want to. If you want to do 4, you can do that as well. The higher that you put that number is the longer amount of time that divergence is actually going to print on the chart. So if you put 10, it's going to take 10 candles for a divergence to come on that chart, and 9 times out of 10, it's going to be a little bit too late at that point for a really good entry. So I usually keep it around 3, and sometimes I'll put it at 2, and you can kind of, what we'll do is we'll look at the difference here. If you put it at 2, I don't even know what that one is right there, but right. Yeah, all right. All right, so what you can also do, so the look back range, I usually keep that default as well, so 60 and 5. If you want the hidden divergence to come up, you can just select these 2 boxes right here. And you've actually got some hidden bearish divergences here that actually pop up, so we're going to look at those in just a second. The live divergence prediction is basically just it kind of gives you a little bit of a head start into a divergence that may be forming, and it has a strength scores there as well. And I always recommend, probably don't pay too much attention to it unless it's a 5 or above. If it's a 2 or 3 or something like that, I really wouldn't pay much attention to it, because 9 times out of 10 it's probably going to be a choppy market, and you don't really want to be in the market at that point anyway. So now another thing you can do is you can set alerts on these divergences, and basically for that you can just select hidden on that right there. That way all these boxes will be selected. And just a side note, all of these other ones can stay default as well. I don't really mess with anything else. So back to the alert. So if you go to alert, you can actually set up a alert for these divergences, and you can just have the symbol as SPY, so whatever you want. So if it's QQQ, SPY, if it's NQ, MES, whatever you're trading, you'll do Trading Oracle Platinum Plus RSI Live Divergence, and you'll do the any alert function call. And basically what that does is it gives you alerts on all of the divergences that you select. So if it's just hidden, it'll just give you alerts on hidden divergences, whatever. But that kind of solves the problem of just kind of sitting there all day long and waiting for a divergence to play out, or whatever the case is. You can just kind of have it on your phone. You can do your interval as whichever one you like, 2, 3, 4 minutes, 5 minutes, any of those. Or if you're a higher time frame divergence trader, you can do it on that as well. So, and then you'll just hit create, and that's it. I've already got our alert set up, so I don't have to do this. All right, we're going to look at some of these hidden bearish divergences here. And this is kind of an example of what I like about these, because they just kind of continue with the trend. So if you mark out, and this is already obviously here, so if you mark out going from here to here, you've got a lower high being made. But if you mark it at the same points here, you've got a higher high being made. And it's the same thing from there to there, from there to there. And this will kind of basically be able to tell you when to, like when it's going to be a good time to get in for these trades. And honestly, for what I typically do anyway is when it's a big trend day like this, whether it's up or down, I'll put this pivot right here, the right pivot, I'll put that at 2. So it'll be only 2 candles need to be confirmed. And when you're on a 2-minute chart, you know, it's only 4 minutes into it. So it's one of those that it's still a pretty early entry as far as that goes. And I mean, these are pretty decent moves, you know, even in options. So I mean, from there to there, you've got about, you know, $3 and some cents. So it's pretty good moves as far as that goes. And I did take the signals off here just because it kind of cleans up the chart a little bit. You don't need the buy and sell signals there at the same time, but they do line up really well with the divergences. And this is another example of a divergence here. This is a hidden bullish divergence. So you've got this point here and point here where it activated off of. And if you go down here to the RSI, you've clearly got a lower low on the RSI and the TSI with a higher low there. So this is just, you know, I'm trying to get you guys to know what these divergences are, what these patterns are. And all they are just extra things to look for when you're trading. So there's some people that, you know, I know the orb and that's like a really, really popular strategy right now, you know, the breakout from the opening range. And there's many different strategies, you know, when it comes to trading. A bunch of ways to peel an onion. So it's one of those things where I've always told people that, yeah, but I just wanted to kind of show you guys these patterns, show you guys why these indicators are popping up like they do, and obviously give you the settings and stuff for my indicators so everyone knows. And just treat these as extra confirmations. That's literally it. You don't need to follow every single one of these divergences because, I mean, 9 times out of 10, it's probably you're not going to get very good results off of that. Have other things that you're looking for in the process, whether it's, you know, bounce off of VWAP, projection off of VWAP, 200 moving average, 50 SMA, whatever it is that you use. Just use these divergences as extra confirmation. That's literally what these tools are made for. They're not made to make the decisions for you. They are just made to provide extra confluence for your trades and for you to feel confident in taking a trade. Because, like I said earlier, if you're not confident before you take a trade, it's probably not going to work out. So I did want to make sure I went through this with you guys, and I hope that this helps a lot. I hope that a lot of you are using this and having success with it. If you are and your settings look even better than what mine do here, please leave a comment. You know, it could help somebody else. There could be some people that, you know, don't have good success with the same settings that I use, and it may help them out. It may even help me out more. So I definitely recommend, if you guys have any questions, if you guys have any pointers or anything like that you've seen, please leave a comment. If you haven't already, please subscribe. We're going to start putting out a lot more videos and stuff soon. We're going to start having some strategy sessions in Discord starting probably the 1st or 2nd week of December. So if you're not in our Discord, definitely recommend getting in there. And I just recommend everyone getting in there so they can be a part of it. And like I said, if you haven't subscribed, please do. Please like this video. And we will see you in the next one. Thanks, guys.